Anyone with over $75,000 loves this video. Daily income trade alerts at noon Eastern. Click the link for a free 14-day trial. There's no credit card required. I want you to make money during your free trial. The target income is $750 per month per $75,000 invested, or 1% per month. Our average return to date is 1.35% per month. The worst month we've had is -1%, and it was our only losing month. We've had no losses, period, over a 90-day stretch. It's no wonder so many of our clients are millionaires. That's $1,500 a month per 150K, $3,500 a month per 350K, or $10,000 a month per $1 million. 12 to 15% a year. I don't want to make any more than that because it would entail taking on too much risk. Our portfolio only has 4 ETFs. The SPY, that's 500 companies. The TLT, that's your 20-year Treasury bond. Emerging Markets ETF, which has 1,000 companies in that single ETF. And then GDX, that's the gold miners, and that has all of the top mining companies in the world. They are highly uncorrelated and protected with an option collar. That means it's extremely rare and difficult for you to lose more than 1% in even a horrible stretch. I'll teach you how to get the general direction right in stocks, bonds, and precious metals. Then the rest is easy, like taking candy from a baby. Click the link for a 14-day free trial. There's no credit card. I want you to make money during your free trial. Income and safety. Zero speculation. Ultimate downside protection. Simplify your holdings, reduce your risk, get better results with less work, and weatherproof your retirement portfolio. Here's how our income-generating trade alerts work. Monday through Friday at noon Eastern, you get a text and email trade alert. The trade takes 30 seconds or less. We've got 7-figure traders taking these trades on the go from their phone. And we've got tons of retirees taking these trades from the comfort of their home like clockwork. Every day I do a live stream on YouTube when the trade is released, so you can talk to me directly. So just click the link for a 14-day free trial right now. Again, there's no credit card required. We want you to make money during your free trial. Who cares that our past performance is red hot? I'm going to weatherproof your portfolio. There is a dangerous financial crisis coming. I'm not just talking about the 2020 election, but that's certain to get nasty. I'm not just talking about the US-China trade war either. What's coming for your nest egg is much worse. The first video you'll watch reveals what's coming that will ruin your retirement. The financial crisis is very close, and here's how you can see it right now. Do you remember the dot-com bubble and the 2008 housing crisis where the stock market crashed? Do you know how they saved the day? Well, the central banks took interest rates from very high levels, very healthy levels that keeps malinvestment out of the market, and then they dropped it to extremely low levels. And so for every 1% they drop, that's worth trillions of dollars that gets pushed into the banking system. And so in 2000, they dropped it from over 6% down to 1%, saved the day. But it didn't work for very long, because by 2008, we crashed once again. And then they went to extremely risky levels of interest for a very long period of time. And on the second time around, they went to even more dangerous interest rate levels of 0% for much of the last decade. The second they tried to raise interest rates, guess what we got? The Christmas massacre in 2018. So they're back to doing what they know how to do best. And poor Jerome Powell has quite a stock market bubble for him to pop. As you can see, they do not have the room to lower rates like they have in the past. In the past, they dropped these interest rates by 5 to 6%. That brings in $6 trillion of credit. This time around, they're already panicking, they're already printing money, and they're already dropping rates. And this almost always leads to a financial crisis. But this time, there's not enough ammunition for them to save the day. So if you think this is something like the 1990s and you've got another 10 years ahead of good times, it's not. Because in the 90s, we were coming from a period of very high interest rates, from 20% to 10% from 1980 to 1990. And so the banks had plenty of room to free up capital and inject it into the financial system. This time around, it's nothing like that. This is more like the period of time we're going into where we're starting off at very low federal fund rates, which we've been raising and crashing and raising and crashing. And now we're out of ammunition, and we all know what happens eventually when you print too much money. You get inflation, and you get stock markets that are more like the 1930s through the 1980s. Now get this. If you bought and hold from 1930 to 1980, you broke even. If you bought the stock market in 1965, you had a 15-year drawdown. So this part of time where they had to hike interest rates because of runaway inflation, we had some of the worst stock market returns in America's history. And there's many parallels we can build between the Cold War and the war with China right now. Most notably is we're coming out of a period of extremely low inflation rates, just like we saw in the late 50s and early 60s. And then because of too much printing, too much misallocation of capital, you end up with runaway inflation. And that's where you get that horrific stock market crash that doesn't last a year or a year and a half. It lasts for a decade and a half. And so the scary thing is that the Fed should already be biting the bullet and jacking up interest rates right now. They are manipulating the CPI, the inflation rate, to look much lower than it really is. If we look at the 1990 metric, we're sitting at 5% inflation. And if we go back to how they measured inflation in 1980, the picture's much worse. You can see it's not only nearly at 10% inflation, it's in a clear uptrend. So we should be back at these extremely high interest rates to get all of the malinvestment out of the stock market and get prices under control. So don't worry, inflation is accelerating, and they can only try to kick this can down the road for at most another 2 years, probably a lot less, depending on how fast we ramp up this trade war with China. But think about it, we're almost at the very end of the rope in terms of what the Fed can do to keep this bubble trucking. I've got so much more to provide to you in terms of value, helping you predict what's going to happen. It's not pretty. Click on the link below for a free 14-day trial. Again, there's no credit card. We want you to make money during your free trial.